Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, June 26, 2025. So, another really, really good day for the Bulls today. We just about made it to the new all-time highs here. We actually came within, I think, 2 points of it. This was kind of an easy trade. I mean, when I first, even in the morning notes, I had said that I was going to be looking to sell some call premium, but once it started going like that, what I did, and this was in the trade room as well, is I did a hedge position, and what I did was I bought the SPY puts, but only a small amount of them, and then I bought the IWM calls, and obviously the puts went down. They expired worthless. But the 113, 213 IWM calls that we bought tripled the amount of the loss. So we did pretty well today overall. And once we started getting up, into these areas, you kind of just knew they were going to drift up here towards the end. So if I know we have some economic news coming out tomorrow. And if they gap it above, you got to remember we have this trade that I haven't really had to I haven't made in quite some time because we have not made new all-time highs. But basically the way it works is when you gap up and you into new all-time highs. So here's one right here. This is one of the trades. So if it gaps up to new all-time highs like this one, and then from there, what the trade is actually coming down to close this gap. But the first target is going to be this right here. So for this particular one, it was 58.60, and then it was the down at the 57.80. So you can see we gapped up, came down to the first target, and then rallied up. And it took actually a little while before we came down and closed this gap. But that's really the trade on it, is that when you gap to new all-time highs, it's going to come down and close the gap that it made it. And it really is almost, I don't remember having a losing trade on that particular setup. And you can see right here where we gapped. Actually, let me do this. I'm going to go to an hourly chart because it's a little bit easier to see these gaps. So here's the one right here, came up, came down to that one. That's what I was just showing you. Here's another one. We gapped up, and we closed that gap right after it. Here's another one where we gapped up. We didn't really make it to new all-time highs, but we got there. But every time we've done this, we've come straight back down. So that's if we gap up tomorrow. If we go down tomorrow, then obviously that's not the trade that's in play. But nothing is, we're back up to the, close to the all-time highs. And really the problem that I was stating when we were here was that our economy was not really doing too well. Valuations for stocks were way, way overvalued, and we're right there again. So what happens is it's a natural, where fund managers have to kind of reallocate stuff because it's, they can't hang on to stuff with huge PEs. And right now, the S&P, the forward-looking PE on it is, back up to nosebleed seats. So it's one of the things where, like I said, I'm not really looking to short this market, but I will remain very, very cautious and wait for the pullback to come. We really should see a move where we're going to start closing some of these gaps. And when that happens, we're going to look for stocks that are at a discount. But the thing is that the bulls hide this very well, because you can see it looked like here we had the big drop, then we were back up again, and this is where everybody was getting frustrated. Oh, why are you looking to short the market? And sure enough, this is what happened afterwards. So it's one of the things where, up here, yes, I was shorting, but right now I'm more on the end of just being neutral on the market and trading the indexes on a day-to-day basis and not looking for the swing trade. So we still have these bearish divergences. Hourly chart, you can see we have these bearish divergences, gap up, gap up. These are, this is where things get a little dicey, is when you just start seeing all of these gaps on the upside, because when it happens and once it starts these gaps start folding down like we did here, it gets down to where the gaps started very, very fast, and I don't really like to see when they move the market up in a gap formation because, as I said, I've said it plenty of times. It's a rally. It's a bull move that's made with toothpicks as a foundation. So there's not all that many. We had a ton of them when we were coming up here. It just seemed like it was gap up after gap up, and it was really just a few stocks. But we have some gaps that I do believe are going to get filled. This one probably is the bare minimum on it. That's at 58.26. But I really think we're going to be coming down to the 56.75. But let's cross that bridge when we get. But here you go. We have bearish divergences on the hourly chart. On the 15-minute chart, we have bearish divergences. Here's a little wedge. Now, the wedge on this is looking for a price target to come down to the 6,020. It's not a huge wedge that's in place, but again, you have sell signals, and we're up here, so I would just remain very cautious on this market. If we head up, then there's a good shot they're going to be heading up to the 6,200 level. But we want to just wait and see how it plays out. For the bears, they're really going to have to. If we just go to a 60-minute chart, this is really the first main support level that they're going to have to take out, and it's going to be this. Right here, you can see we have it's resistance, then it was support, and then we also have the moving average. So until the bears can push price below the 51.50 level, the bulls are going to remain in control, and they'll keep buying this dip. It's when this gets taken out is when we start looking at lower levels. But right now, this is really the first target that I would be looking at on the downside. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.